Welcome traders. In this episode, I'm going to explain the difference to you between day traders and swing traders. First of all, you have to appreciate and understand that there is some history behind this. Although today we have a lot of different markets that we can get involved in, such as cryptocurrencies, foreign currencies, stocks, bonds, options, and indices, that hasn't always been the case. If we go back just 30 or 40 years ago, most investors and traders were focusing predominantly on either stocks or bonds. Stocks are always listed in exchanges around the world, and exchanges tend to have daily operating hours, for example, from 8 a.m. to 4 p.m. So don't forget, of course, that before the age of computers, stock exchanges have been around for more than a century, and it has become an industry for traders to speculate on the changes of price of instruments from the exchange during the day when that exchange is open. A big problem that can occur, and has occurred, is that after the exchange closed for the day, there could be a change in the perception of a company after hours. For example, a poor performance report or some adverse news announcement, and then the next day when the stock market opens again, that particular company's stock price could change so significantly that any trader who's exposed in that stock could find themselves in very deep trouble. Because of this very real danger, most of these traders decided that it was best for them if they closed out all of their positions before the exchange closed for the day. And this is where the term day trading comes from. One big benefit for day traders was that they would not have any financial exposure overnight when they went home. They didn't have any skin in the game. It also meant that every day when they woke up, they had to start from scratch and find their next opportunity. It also meant that their focus had to be very narrow on the specific markets that they were monitoring moving up and down that day. They didn't really have the luxury of thinking about where that market was going to be 2 or 3 days later, or even a week after that. They have to make those decisions in the moment based on what the market was doing in real time. So now it turns out that there were other traders who preferred not to close out their positions before the end of the day. And instead, they found out that they could also profit when they took a slightly longer term perspective on the movements of the markets. Longer term in this case, referring to a few days or possibly a few weeks. One big similarity between the two types of traders is that they were focusing predominantly on the immediate next move in the markets. The only difference being that one took a few minutes or a few hours and the other could take a few days or a few weeks. These traders discovered that the markets would often exhibit a type of breathe in, breathe out behavior, which would produce turns or swings in the price action. They then learned that these turning points could provide them with excellent entries before the next moves began. I highly recommend that you make the time to read Jack Schwager's Market Wizards series of books. He has interviewed some of the most amazing traders over the last 40 years, and there are some incredible stories there that you will find quite inspirational and very helpful. These two types of terms for traders has changed a little in the last decade. They now tend to refer to whether you trade on the lower time frames or whether you trade on the higher time frames. There isn't necessarily a difference in the trading styles, but more just the time frames the traders choose to engage on. Also keeping in mind that now there are a lot more markets that also open at least 24 hours a day, sometimes even up to 7 days a week if you include cryptocurrencies. This means that traders don't necessarily have to close their positions before the market closes, unless that's part of their strategy. The great news is that the financial markets continue to grow in terms of accessibility and opportunities for everyone. The only thing we need to be aware of is that some education is required if we wish to be sensible and safe when we engage in these markets, or otherwise expose ourselves to unnecessary risks. So, are you a day trader or are you a swing trader? You may not know the answer to that right now, and that's okay. Every trader needs to find their groove and design their trading lifestyle around their goals and what works for them. If you're serious about trading and you want to learn more, then get in touch with me on my ambassador's homepage at FXGlobe.